Hi guys, welcome back to Pristine guys. So today we'll be looking at a very promising company in the mining services industry called Lycopodium Ltd, which is listed on the ASX. And this company is actually a very well established player in the mining industry, and it primarily operates as an engineering consulting services provider in the mining industry. And of course it also has diversified its presence across a few other segments such as the rail infrastructure segment and other industrial segments which actually provides a very diversified revenue base to its operations. And let's just start by taking a look at the company's financials first. So, as you can see, after the company experienced a slight decline in its revenues during 2021, which where the revenues declined from around 206 million in 2020 to around 158 million in 2021, the company has actually delivered a very strong and stable recovery in its sales profile since then, as its revenues grew to 228 million very quickly by 2022 and has since grown to around 344 million by 2024. And during this same time, as a result of both a significant revenue expansion as well as an enhancement in the company's net margins from around 5.78% in 2020 to almost 14.72%, which the company's net margins have actually tripled over the last 5 years alone, which remains a very encouraging aspect towards profitability and earnings growth in the future. And anyway, so as a result of both the net margin expansion and the revenue growth, the company has actually been able to increase its overall net income from a mere 11.8 million in 2020 to 50 million in 2024, which again marks a growth rate of almost fivefold within a 5 year time frame. So this kind of highlights the company's strong growth position within the mining industry, and it actually fares well both in terms of its sales as well as its profitability growth. And let's just take a look at the company's presentations to see if there are any exciting projects, or if we can find out any data or any insights of the company's operational growth or operational status. So, having looked at this presentation previously, I noticed a few exciting things about this company, which could really provide some strong sustainability towards its future growth. And one of those aspects is its global and geographic diversification. And as you can see here on this chart, the company actually has an established presence across the world, ranging from Africa to Australia and Southeast Asia, as well as both the American continents. And especially the company holds a very strong presence across countries such as Peru, Canada, USA, Argentina, etc. And having an established presence in some of these countries such as Africa as well, which are prominent for their resources and mining industry. This remains a very promising aspect towards the company's future growth. And another promising part is that since the company is merely an engineering services provider and a consulting services provider to the mining industry, it kind of safeguards the company from any price volatility that could arise from any global calamities or any natural events which might impact productions or the supply of any of these underlying resources. And acting as a mere engineering services provider, the company can actually assume some sort of a sustainability in its overall sales growth in the future, because to advance exploration activities and to advance the number of mining and resource projects on a global scale, engineering consulting services are actually a must. And the company can expect to generate stable revenues regardless whether or not the market is performing well or not, or regardless of whether the underlying resources are faring well in the market at present and in the future or not. And another thing is that the company's operational diversification across the resources also remains very promising, as you can see here on this chart, where the company has around 18 gold projects at present. And it also has it's also trying to establish its presence in the battery mineral segment, which is a very promising segment in the resource industry where a huge drive in energy demand on a global scale, as well as the EV industry continues to drive a lot of demand towards this segment. Same goes with lithium, and the company obviously already has an established presence with 3 projects in the lithium sector and around 5 in the study phase. Same goes with and similarly in the mineral segment and the uranium segment. Both of these segments also remain very promising for the company, but the company does not yet have an established presence in these segments yet. But rest assured, the company's approach towards expanding into these segments remains very promising towards its future growth. So let's take a brief look at the company's valuations and the company's technical parameters. And one thing you can notice here is that even though the company experienced a slight financial decline during the second half of the fiscal year 2024, where its earnings declined from around 30 million during the first half to almost 20 million during the second half, and this decline was also very significant in comparison to the prior corresponding period where the company generated a net income of around $27 million. And this decline has actually set in a lot of market panic, which has led to significant overselling of the security, as you can see on the technical charts, where after trading around a level of $14, the stock is now trading at a mere $10 or so. And if you look at the weekly chart, you can see this decline in context, and this has actually resulted in a slight undervaluation for the security, where you can see that the company's P ratio, which used to trend around a range of around 10x to 15x in the previous years, to a mere 7.75x at present, which is a result of both the significant earnings growth during 2024 as well as the stock price decline over the past few months or so. And this undervaluation actually presents a promising opportunity for capital gains in the future. And if you look at some of the technical parameters, you can notice that the company's RSI is actually retracing from the oversold zones, and the RSI basically tells us and gives us an idea of the market buying and market sentiment towards the security. And below 30 you see an indication of overselling, and in the same sense, as soon as the RSI crosses 70 or approaches 70, you get signs of overbuying in the market, and which indicates that the stock may have been bought more than it deserves or more than it is actually worth. And same goes for overselling, of course. And you can see that the stock is actually retracing from the oversold zones and can potentially continue its upside momentum considerably further, and might even go up to, this RSI and the market buying momentum could go up to around 70 or so, and which would provide a considerable upside potential to the investors. And the security recently rebounding from its lower Bollinger Bands also remains an encouraging prospect. And the most attractive part about this company is that its dividend yield remains very attractive at present, with a current yield of around 7.62%. And you can see a recent trend of considerable dividend growth. I mean, there have been some fluctuations in the overall dividend payments, but the overall long-term growth trajectory in the company's distribution and the future scope for the company's earnings growth both actually encourage the prospects for this yield to actually go up for investors even further, which may go up to around 8 or 9% potentially over the next few years, assuming that the company sustains its current earnings growth trajectory and the company's current healthy payout ratios. So based on this, you can actually conclude that the company both highlights a considerable income generating potential for the investors, as well as highlights a strong capital return generating opportunity from stock price appreciation as well. and the overall long-term sustainability of the company's operations, just provides you a bit more confidence in its ability to provide you consistent income on an annual basis through mere dividends alone. And the undervaluation just remains the cherry on the top, which can actually boost up your portfolio considerably over the next few years. So do have a look at Lycopodium. And one more promising aspect which could actually drive the company's growth in the future is the fact that even though the company is currently relying on the resources segment primarily, as you can see here on this chart, where in each year it has, relied on the revenues from the resources industry for its, overall sales growth. But its recent diversification into other segments and primarily rail infrastructure remains very promising and could be a key driver of the company's growth in the coming years.